let's have a look at Brazil. So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So, Brazil is in South America. We have it here, 18% from the 52-week low, 11% away from the highs. So here is the ETF, EWZ, Brazil. The interesting thing about the Brazilian stock market is that it's very erratic. Yeah, as you see here in the chart, you have big bull markets, you have bear markets, you have small bulls, small bears. Like here, as an example, you all of a sudden get a 47% bull, and not too shabby, and then you get all of a sudden as well, you get a big bear of like 35% pullback. So this ETF is extremely tradable. And it's also suited for a rather interesting option strategy. Or you don't need to use options. You could of course go long and short, but basically, this is the type of security where you can make money being a bull and being a bear and sort of going back and forth. And this security will also train you how to flip between bull and bear as the situation warrants. Okay, so the current state is that we do have time cycles. So let's look at how repeatable they are. We do have some decent time cycles here. So yeah, ever since March 2021, the time cycles have been fairly clean, not squeaky clean, but fairly clean. The time cycle do suggest a declining phase here into summer, which is of course bearish. Due to the behavior of this ETF, where it has punished bulls and also bears that do not move out of the way in due time, it increases the probability that we will see more downside. Then again, this is not the beginning part of the downside turn. It's already down 11% from the highs. So this is why this ETF is in a situation where one could, hypothetically, sell both a call and a put vertical on this ETF. So selling a put and a call vertical, it benefits from the time decay of options. The caveat here is that it can cancel each other out, of course, completely. The logic here is that when you do these two trades, you can manage them also separately. That's the thing. And given that Brazil is now in the middle-ish of the battle zone between the bulls and the bears, you could have a situation where at X time the sold call vertical will be profitable. You can then close it. At a separate time, maybe the put vertical. Okay, so the sold put vertical can also be profitable. So the sold call and the sold put vertical can be profitable at different times. The only type of security I would use for that kind of trade would be something like the EWZ, which is very messy. It's very erratic. So when you are in the middle-ish of the battle zone, you can actually have a situation where trades that theoretically should cancel each other out, they actually don't necessarily do that. But yeah, let's do some TA here, technical analysis. We recently lost the red 200-week moving average and the green 50-week moving average. Simultaneously, we have a bit of a golden cross in development. But, given that this security is erratic, it makes it more difficult to trade those kinds of patterns because it's inherently just sending a lot of signals to bulls and the bears. Yeah, when we go here, you can see that the 20-day moving average here in purple, it's been resistance. We've now also lost the red 200-day moving average. The green 50-day is approaching the 200-day moving average. So while we have a golden cross on the horizon here on the weeklies, on the dailies, we have a death cross. That is just how the cookie crumbles with these kinds of securities. They are just really just, they are messy, but that also opens up opportunities for swing traders. Looking at RSI here on the weeklies, we are a bit on the lower end of the spectrum, which also increases the probability that selling both a call and a put vertical could actually work out at different times. Because, as I said, this security is a bit messy. Here are the dailies. We are on the lower-ish end of RSI, but not on the extreme low where you just have to go bullish. So when it comes to the Brazil ETF, the most clean pattern we found was bearish time cycle. Okay, so that's the thing. I will give the technicals a -4 in favor of the bearish. So next we will look at the seasonality for Brazil. So the seasonality, it's a bit bullish here to the left into May in the table view. So by the way, red is the average over the last 10 years. Then you have the last 7 years in blue and the last 5 years in green. So in the table view here, so we are in the beginning of April. April, going back here to 2013, even 2006, it's kind of been bullish. Looking at the sum, it's the most bullish month. However, when it's bearish, it can be viciously bearish, like in 2022, 14% loss, 7-ish% here in 2012. So, and 2004 was not exactly bullish either, but April should be a bullish month. So when it comes to the seasonality, I think I will give the bulls a 5. I would have given them more, except that we do have a bearish time cycle, and a time cycle is also, while it's while it's a technical analysis tool, it has seasonal characteristics, given that you have a period of rise or a period of decline. So it sort of undermines the bullish seasonality we have. Let's look at the fundamentals. I am comparing Brazil with the ILF, which is the Latin America large cap ETF. Okay, so when we go here to performance, year to date, 9% loss here for Brazil, and then you have 3% for the large cap Latin American stocks. PE, 4.5 for Brazil, 5.2 for the large caps. 6% yield in Brazil, 4.7 for the large cap. Here are the holdings. I certainly have some large caps repeating in both, and there's not that many holdings, like 50 holdings for EWZ and 42 here for ILF. And here you can see the sector breakdown. So the yield was pretty good. So that was pretty interesting to see that yield. And if you get into the options, you of course need to be aware of when you have the ex-dividend date, because that could become an issue when you have the options, when you sell options. With verticals, like selling, call, and put verticals, you do have a risk-limited trade. But you do still have, this whole thing about the dividend. When it comes to the year-to-date loss, also the PE, I do think that overall we have a slight edge here to Brazil. Give the bulls a 2 on the fundamentals. Next, we will look at relative performance. Okay, like that. Okay, so long term, we have a 28% correlation with S&P 500, positive, but pretty weak. 96% with ILF, very strong. Minus 50% with the dollar index, UUP ETF. Short-term correlations using daily data points. 54% with S&P 500, 93% with ILF, and also minus 67% here with the dollar index. But yeah, short and long term, we definitively have the strongest correlation with ILF. On the topic of options, you can see here where the dividend is paid out. June, December, June, December. So it doesn't seem, well, the pattern is fairly clear. Here you can see also December, June. So more than likely, we will see the same thing this year. Hence, trading options on the EWZ shouldn't really be like contain a dividend risk until you get into towards June, and that is still some distance away. But yeah, let's look at ILF. What kind of patterns do we have there? So yeah, we see very major time cycles here. You see that you have this big time cycles, but they have different in duration. You also have smaller time cycles. Yeah, this pattern has been fairly repeatable, suggesting that there is a declining phase in development here as well. Looking at a seasonality, then again, you do have some potential bullishness this month. April can be bullish for ILF, but similar to Brazil, when it is bearish, it gets rather bearish. Okay, so let's now compare EWZ with ILF. So in this case, we do see that vis-a-vis RSI, we are at a very low level. This is a support. You could make the case that there's a decent probability that Brazil will start to outperform the ILF. So that's interesting. On the dailies, yeah, same thing. We are at support here on RSI. Seasonality also favors Brazil heading into May. April also is favorable to Brazil, even the really bad months, well, bad years of where we had a bad April. Brazil outperformed ILF. So yeah, going back to my notes here, that was favorable to the bulls when it comes to Brazil. I think I will give the bulls a 6 on this one. This was pretty good. So the entry signal is that we have a bearish time cycle, which of course is a bearish signal, but the overall score is 2.3 in favor of the bulls. So that's Brazil. So I think the most interesting thing about Brazil is to trade Brazil. It is very erratic. You know, it goes up and down. It has bull markets. It has bear markets. So when you time the beginning of these cycles, then you can be like very directional, be like a solid bear or a solid bull. But when it's sort of in the middle-ish zone, then this is one of those securities where other types of trades could actually work out. And I think that selling a call and a put vertical could be interesting. You do benefit from the time decay of options. So you have sort of like the time as your buddy. And given the erratic behavior of the security, as long as you give yourselves, you know, some time, like a couple of months, the odds that both verticals can be exited at X time with a profit is actually there. Yeah. So there are, of course, option trades where you can do these kinds of strategy with one single trade, but the reason why I would like to divide it into two is simply to be able to manage them easily separately. But yeah, I think that's the strategy I will do with this one. It's an unorthodox strategy. And it should like, of course, only be done with a security where you think that there's a decent odds that within the time frame you have, that there will be a major move up, but also could be a major move down, because that is how both verticals then could be profitable. But yeah, have a great week ahead and stay tuned for more.